This is East Asia Tonight.
Good evening, everyone. I'm Jill Newbrunner, and here are tonight's top stories from East Asia. Time running out to find survivors of Tuesday's earthquake in Japan. Rescuers combing through a badly damaged mall in the sweltering summer heat. China's top officials pledge more support for the economy after growth slipped towards the bottom of Beijing's target range, but stopped short of announcing fresh stimulus. Samsung posts a 19-fold jump in second quarter profit, but shares fall after warning memory chip shortages could worsen and persist into 2028. Japan's Prime Minister vows to proceed with a temporary cut in sales tax on food as her approval rating slumps. The ruling party says it will not be funded by more borrowing. Also tonight, South Korean lawmakers grill the former national football coach over the team's quick exit at the World Cup. And fans of K-pop giant BTS stand behind the band over its decision to opt out of the Grammys over the new Best Asian Pop category. A race against time in Japan's quake-hit Kumamoto prefecture. Rescuers are searching for survivors under collapsed buildings after the powerful 7.1 earthquake 2 days ago. The death toll has climbed to 34. Officials say most of the deaths were reported at a paper mill in the city of Yatsushiro and at a shopping mall in the Kashima town where there was an explosion from a suspected gas leak. The number of missing people remains unknown. Concerns also mounting for the survivors as tens of thousands remain without power and water in the summer heat. Authorities warn of heat stroke as temperatures are expected to hit around 40 degrees Celsius over the weekend.
被災者の救命救助、まさに時間との勝負でございます。本日も警察消防自衛隊を中心に、懸命の救命救助との活動を行ってまいります。
CNA senior correspondent Majesh Dutt joining us live now from Tokyo with the latest. Now, Michio, how are the search efforts progressing as the clock ticks down to that all-important 72-hour rescue window?
Well, Chief Cabinet Secretary Minoru Kihara said they are fighting against time as search and rescue continue, particularly at Aeon Mall, Kumamoto, which exploded after the magnitude 7.1 earthquake. He specifically mentioned numbers such as 370 firefighters, 190 police, 170 self-defense force are working together with rescue dogs on site. Now, at Nippon Paper Industries' damaged factory, he said 280 firefighters, 70 police forces, 30 self-defense force members are in action. And Mr. Kihara emphasized saving lives is the top priority. And in order to accelerate the decision-making, at 2 p.m. local time, the central government set up a disaster support headquarters in Kumamoto. And it's headed by State Minister of Cabinet Office, Mr. Jun Tsushima. Mr. Tsushima was sent to Kumamoto on the day the powerful earthquake hit to lead the team to investigate the situation on the ground. Now, Kumamoto Governor Takashi Kimura welcomed the central government's decision. Now, he updated reporters on utilities, and he said that power should be restored soon, and gasoline is being transported from nearby prefectures. But drinking water is expected to take time to be restored as pipelines need to be repaired. So he needs water transported from other prefectures. Now, Governor Kimura said the entire Kyushu is expected to send officials to improve support for Kumamoto and its residents. But for residents without power, dealing with the heat is a challenge. It was a high of 35 degrees today, and on Sunday, the forecast is 39.
Michio, you know, the Kumamoto, as well as the surrounding areas, now they're home to a lot of manufacturers and businesses. So what's been the impact on the economy?
Well, Chief Cabinet Secretary said, and he actually painted a rather optimistic picture stating ports have been temporarily repaired so that supplies can be transported from sea, and operations at factories that have suspended are preparing to resume. And he did not elaborate more, as he said it's actually too early to assess the impact on the economy from the earthquake. Then there are local media reporting factories cannot resume operation due to supply chain disruption. A bit of good news is regular flights to Kumamoto Airport has resumed, and Kyushu Bullet Train has partially resumed, but the route between Kumamoto and Kagoshima is not ready yet. And Kumamoto has to remain vigilant of possible strong aftershocks until next Tuesday. On Wednesday late evening, an aftershock measuring 5 on the Japanese seismic intensity scale of 7 was observed. And the meteorological agency warns a powerful earthquake could hit again.
All right, Matcha Ishida there with the very latest on the developments following the earthquake from Tokyo. Thank you. In other news, the U.S. has announced new sanctions seeking to cut off Iran's Hormuz income. Among the blacklisted entities are a group of Chinese and Hong Kong shipping firms that Washington accused of violating its blockade, carrying millions of barrels of Iranian crude and petrochemicals to China and the UAE. The U.S. State Department says the 8 shipping firms operated vessels that function as part of Iran's so-called shadow fleet. Beijing has yet to respond to the latest measures, but it has consistently opposed unilateral U.S. sanctions and defended its economic relations with Tehran as legitimate. That's not subject to Washington's jurisdiction. Now, in May, China issued a ban prohibiting any recognition, enforcement, or compliance with U.S. sanctions on 5 Chinese refiners accused of trading Iranian oil. And Beijing invoking for the first time a 2021 blocking law designed to protect firms from what are described as unjustifiable extraterritorial measures. The latest sanctions are part of broader American pressure campaigns, with the U.S. Central Command announcing the successful completion of a fresh wave of strikes on Iran. Donald Trump has vowed to hit the Islamic Republic hard in retaliation for Tehran's first attack on American allies in the Gulf in days. Well, let's get your business update now with Roland Lim. And Roland, we're looking at some policy support measures being announced in Beijing today.
Jill, you're right, but it's not new spending. But Beijing is acknowledging that second quarter slowdown cannot be ignored. The significance lies in the change of tone. China's top leaders are pledging more practical and effective measures to support the economy while acknowledging the challenges that it faces. They stop short of announcing fresh stimulus at a key meeting today. State news agency Xinhua says that China's Politburo has pledged to speed up fiscal spending and accelerate the shift to new growth drivers. It also set October for the 5th Central Committee plenum, which will lay the groundwork for next year's Party Congress. The meeting comes as pressure mounts on the world's second biggest economy after growth slowed unexpectedly to 4.3% in the last quarter, missing the government's 4.5% to 5% target range. Now, CNA's Crystal Chia joins us live from Shanghai with more details. Crystal, how far have policymakers indicated they are prepared to go in terms of support measures?
Roland, all in all, it's a more supportive tone, but like you said, we do not have any concrete stimulus measures. Now, President Xi said that China's economy continues to face challenges, but also urged confidence to sustain its high-quality growth. This is a phrase that is one of the president's signature economic concepts, referring to growth led by technology instead of investments or property. Now, he also mentioned domestic demand and accommodative monetary policy, which would be a welcome signal for businesses and investors looking for financing to sustain growth. Apart from talking about the economy, it was also announced that the 5th plenary session of the party's Central Committee would be held in October. Now, this is important because it's coming about a year before the party's next National Congress, where we could see a major leadership reshuffle.
How has the policy announcement been received, given the state of the Chinese economy right now?
So the outcomes of the meeting were not surprising, given the high stakes that the meeting was held under. You mentioned the 4.3% figure for last quarter. That's actually the weakest in about 3 years. And in particular, what's been happening is a divergence between China's high-tech AI sector, as well as very ordinary day-to-day issues such as household spending, consumption, and property. On one hand, we are seeing China's high-tech exports, its AI capabilities that have shocked the world in recent months. And on the other, when I speak to people in Shanghai or in China, they are really tightening their wallets, choosing to spend on a day-to-day basis instead of investing in large-ticket items such as property or cars. All this due to fears of economic uncertainty. Now, going forward, one major concern for China's economy is jobs. This year alone, 12.7 million graduates are heading into the job market. That's already that's as tough as it gets to find a job, and AI is further complicating matters. Goldman Sachs says that AI-related job displacements could amplify China's macroeconomic headwinds and delay or even possibly derail the recovery in certain segments of China's economy. Roland?
Thanks, Crystal. That was Crystal Chia reporting live from Shanghai. And coming up on East Asia tonight, Chinese data center supplier Zhongji Innolight gets swept up in a global tech sell-off on its trading debut, tumbling more than 9%, raising about $7 billion in the city's biggest IPO in 7 years. Plus, the Middle East crisis and a slump in China led Toyota to record a drop for a 5th month in a row. Welcome back. Time for your business news. A South Korean tech giant Samsung has flagged that memory chip shortages will likely worsen next year and extend into 2028. The chipmaker's remarks suggesting that demand for AI-related infrastructure is holding steady, even as some observers are getting worried that major tech firms may slow down their aggressive spending on the sector. Samsung's comments also largely in line with competitor SK Hynix. The rival chipmaker had stressed that there was no let-up in AI-related build-out. Samsung gave its commentary after releasing another stellar quarterly earnings report card. Revenue for the second quarter soared 130% on year to an all-time high of about $120 billion. Operating profit rose more than 19-fold to $62 billion, with net profit almost 1,300% from the previous year to close to $50 billion. A big bulk of the earnings came from Samsung's semiconductor unit. The division reported a 250-fold on-year increase in its operating profit. The chipmaker's second quarter results largely beat market expectations, but shares have been swinging between gains and losses. Samsung stock surged more than 6% at one point, down 0.7% for the day. So why are markets signaling that excellent earnings are no longer enough? Well, Josh Gilbert, lead analyst, Asia Pacific and Middle East at eToro, here to break it down for us. Josh joins us from Sydney live. Josh, good to have you on the show. Samsung, SK Hynix reported stellar profits, yet their stocks fell. So is this sell-off really about weakening fundamentals or simply valuations that have gone too far ahead?
I think it's a number of things. Firstly, the South Korean market was one of the best performers at the start of this year. And what we've seen in the last sort of month or so is a brutal sell-off across, South Korean stock. So that's one of the major reasons is sentiment is pretty weak. And when we look at those numbers, you showed those numbers on the screen there for Samsung. These are really strong fundamentals. This is a business that is continuing to deliver. The worry for investors is ultimately coming from that these businesses aren't necessarily selling more memory. They're just selling them at much more higher prices, right? So it's selling it for vastly more money. So when your costs are staying the same, your prices are increasing, basically your earnings are then going to keep growing. But the worry is if that pricing power diminishes. At the moment, Samsung and SK Hynix have that pricing power. But what we've seen in this memory boom in the past, when we've had previous memory cycles, is that once it sort of slows off and if demand increases, then you have an oversupply. So that's what the market is worrying about at the moment. But a lot of it also does come down to sentiment being pretty fragile with the sell-off that we've seen in South Korea.
Samsung warning that chip shortages could persist through to 2028 and their customers are signing 5-year supply deals. Does this suggest to you that the underlying AI demand story, that's still intact?
Yeah, absolutely. Look, we fully believe that this AI boom is going to continue and will continue long into the future. I think particularly with these two companies, when we think about the AI systems, they always need two things: chips that do the thinking and the memory that feeds the data. So if we think of the chip as the brain, the memory is how fast the information gets in and out. And that's ultimately enormous. So when you build a data center, you can't just buy, say, NVIDIA's chips. You have to buy memory as well. And right now, there just simply isn't enough in the world. And we've heard from a number of big tech companies, Alphabet last week, Meta today, and Microsoft, who are telling us that demand continues to outstrip supply. And that's really why we're seeing so much pricing power for these companies, is because the demand is there at the moment. So for us, this isn't a demand problem at all. It's just a little bit of investor worries, but we see, this AI train, if you like, continuing over the next couple of years and really not slowing down.
Josh, I want to talk about the AI trade. Everybody seems to be chasing that same trade right now. Samsung, SK Hynix, Micron, all racing to build more capacity. But are we at a point where AI has just been too crowded as a trade, you reckon?
Well, I think that's what we've seen sort of unfold within the last, month or so, particularly in South Korea, coming back to it. But when we look at sort of the size of Samsung and SK Hynix, they're sort of, it's the most concentrated major market in the world. They make up such a big portion of the Kospi itself. So when we're sort of seeing that unwind, it's really having a big, hit on the market. But we're also seeing that broadly across, global chip makers as well, that weakness coming through. And I think a lot of that does come down to valuations. I wouldn't say these memory makers, the valuations are coming into question because, they're trading at pretty low valuations. But more broadly, I think it's this sort of circular financing that is worrying some investors. Alphabet paying, the next person and the next person paying the next person, right? So I think there's a bit of a concern there. But ultimately, I think investors are just sort of not willing to pay any price for these companies at the moment, which I think go back a year, they were willing to pay anything for that growth that we've been seeing in AI.
And where are we in that correction, do you think? Are we near the bottom or there more pain to come?
Yeah, great question. I think that we're certainly seeing, the market settle a little bit. I think we saw that from those results today. I think the big part really is that the results that we've seen from Samsung really cut through the noise. Microsoft as well really revealed today that, they're a business that can ultimately deliver strong revenue, can keep cash, driving through the door, but also keep spending money at the same time. And that's what the AI trade is all about and what the market wants to see, that you can deliver growth, you can keep profits high. And then if that's the case, then the market is happy with you spending. So look, we see the recent pullback, particularly in South Korea, as a bit of an opportunity. SK Hynix and Samsung falling off those levels will certainly be seen to a lot of investors as an opportunity at the moment.
And before I let you go, one last thing. What are you going to be watching out for the next few weeks? to tell you whether this is a real slowdown or just a healthy reset?
Yeah, well, over the next 24 hours, we've got Amazon and Apple coming through. Amazon is, one of the biggest cloud names in the whole entire world. So their capital expenditure numbers are really going to be in the spotlight. We're expecting growth there to accelerate. But again, the capital expenditure number is really going to be important. When you're the world's largest cloud business, just like Microsoft delivered, we want to see cloud growth and we want to see ultimately their bottom line delivering. If that holds up, then I think the market will, feel a little bit of calmness coming through as well. But I want to see the South Korean market, settle down a little bit. If sentiment recovers, then we may see buyers, coming back to the fold. But I really do think tomorrow is another big 24 hours. Amazon and Apple also reporting. If we get good results there, I think it will, boost sentiment and give the market a nice boost after, some recent weakness.
Josh, appreciate those insights. That was Josh Gilbert, lead analyst, Asia Pacific and the Middle East at eToro. A Chinese optical parts maker, Zhongji Innolight, made a lacklustre debut after completing Hong Kong's largest listing in 7 years. Its shares finishing the day down 2% from their 980 Hong Kong dollar offer price. Its Shenzhen listed shares also dropped nearly 9%. This is the second largest offering in Asia this year, behind Chinese chipmaker CXMT Corp's IPO in Shanghai on Monday. Our correspondent Geraldine Yap reports.
Zhongji Innolight's listing was closely watched not just because of its size, but also because its first trading day coincided with a global sell-off of AI-related stocks. The company's shares fell after trading started, and one analyst tells me this reflects the significant pullback in AI-related stocks in Hong Kong and other markets, the US, South Korea and Japan, and it shows investors are showing a degree of anxiety. But many believe that in the medium to long term, AI-related stocks are still on the uptrend. And the blockbuster listing of CXMT Corp in Shanghai on Monday points to investor optimism around China's AI sector. A bit more on the company. Zhongji makes optical transceivers. These are parts that help move large amounts of data through fiber optic cables, so they are key components in data centers. Now, the company actually started by making motor winding equipment for household appliances like washing machines and developed China's first automated production line for these motors. It then bought another company in the optical module industry, Innolight Technology, which was backed by Google. The merged company then shifted its core business to making optical transceivers.
今天我们站在香港这一国际资本市场的重要的平台，与来自世界各地的伙伴共同见证这一重要的时刻，更加深刻地感受到了开放、合作与互信的力量。未来，中继续创将继续坚持创新驱动、稳健经营，以更加开放的姿态融入全球的资本市场。 与全球客户、合作伙伴和投资者携手同行。
Zhongji has already benefited from the AI boom in recent years, with its first quarter profit for this year up nearly 4 times to 6.3 billion yuan. 60% of its sales in the first quarter of the year were in the US, and its customers include Facebook parent company Meta and chipmaker Nvidia. It's now raising funds for research and development, as well as to expand global production and supply chain capabilities. Looking ahead, we're expecting a few more high-profile listings on the Hong Kong Stock Exchange for the rest of the year. They include Chinese fast fashion retailer Shein, which could list as early as the end of next month. Another company to watch out for, Chinese social media giant Xiaohongshu, which is expected to list at the end of the year. Geraldine Yap, CNA, Hong Kong.
Toyota Motor has reported its 5th consecutive monthly drop in global sales. The dip in June closing out to lower first-half performance for the first time in 2 years. Despite that, Toyota Group still retains its title as the best-selling automaker. Now, sales worldwide in June dropped about 1% on-year, pushing the metric for the overall 6-month period down 2.8% from the previous year. Weak demand in China was the main drag, as Toyota has been facing fierce competition from local car makers. Disruptions from fighting in the Middle East also hampering its shipments and driving production costs higher. And that'll do it for business. Jill.
Thank you, Roland Lim, with the business news there. Coming up on East Asia tonight, food and drinks in Japan set to be cheaper as the Prime Minister vows to cut the sales tax. It's a popular move, but at what cost? We ask an expert. And how a matcha renaissance around the world is leading to a shortage and record high prices in Japan. This is East Asia Tonight. Nice to have you along. Here are the headlines. Time running out to find survivors of Tuesday's earthquake in Japan. Rescuers combing through a badly damaged mall in the sweltering summer heat. China's top officials pledge more support for the economy after growth slipped towards the bottom of Beijing's target range, but stopped short of announcing fresh stimulus. And Samsung Electronics warning memory chip shortages could persist well into 2028, sending the Korean company shares down despite a 19-fold jump in second quarter profit. To Japan, Prime Minister Takaichi is going ahead with a plan to slash the sales tax on food and soft drinks to 1% from 8% for 2 years starting April. The proposal could help shore up support for Ms. Takaichi, whose approval ratings have fallen as voters struggle with the rising cost of living. And the government will also provide cash handouts to eligible households to help reduce food expenses. But there are concerns over how the lost tax revenue will be covered. Now, Japan is already grappling with mounting public debt and rising borrowing costs. The ruling party has given the assurance that it aims to fund the tax cut without issuing more debt. So how does this all work? Well, let's get analysis now. We're joined by Stephen Nagy, Professor of Politics and International Studies at the International Christian University in Tokyo. Professor Nagy, a warm welcome. Now, is this a genuine cost of living relief or perhaps a shrewd political move to shore up her approval ratings?
Well, like most things with politicians, it's probably both. The reality is Japan did live in a deflationary period and period of stagnation for about 30 years. So the increase of the cost of goods because of inflation that's been experienced since the COVID-19 pandemic has impacted, I think, the regular consumer in Japan quite a bit. So I think there's a sincerity of moving the sales tax from 8% to 1% over 2 years. But like politicians are always looking for votes, I think that it is a shrewd political move to try and shore up some political support for her relatively lower rates compared to where she was, let's say, 3 or 4 months ago. And this is the way I think that she's going to move forward in terms of shoring up her political base, but providing some needed relief for ordinary Japanese citizens.
Okay, interesting. But why do you think Prime Minister Takaichi settled on 1%? Why not go 0%, in the proposal? And what does your answer say about whether it's good economic policy or just probably the least damaging compromise?
Well, I don't think she could have got through a political fight to have zero sales tax, even though it might have been popular with the ordinary consumer. The reality is that Japan does face severe public debt. It's more than 200% of annual GDP. And, that's going to impact Japan's future growth if they can't get it under control. Yeah. So that 1% was probably the best she could do in terms of tax relief for the ordinary citizen. But as you mentioned in your interlude, Japan has huge public debt. It's increasing its defense spending to deal with the challenges within the region. And there's those black swan events like the Kumamoto earthquake that just happened that's going to require funding to help those citizens. So there's no easy solution, but this is one that's going to win her political points and help those ordinary citizens.
But surely the question is, if the government isn't going to rely on these deficit financing bonds, how then is it going to afford this $5 trillion tax cut?
So traditionally, in terms of Japanese debt, is what they've done is they've borrowed from domestic banks as opposed to international banks. And the contrast, of course, is the United States, which borrows from everyone. But Japan is borrowed from the huge amount of savings that exist within the Japanese system at domestic level. So they're paying domestic rates. They're paying, they're accessing this huge amount of savings to deal with to get extra spending for initiatives like this tax relief budget. Now, that's going to continue. The question for us is how much can Japan continue to rely on the domestic banking system and to provide debt relief and provide extra monies for these kinds of events. And, we've never come into a situation in terms of modern economics where a country has been so indebted, but it's a pattern that actually many countries are following, is try to fund domestic programs through the domestic banking system and domestic savings to separate, the challenges of financing debt with the more unstable international environment that we're experiencing.
Interesting you say it's an area that, more countries are kind of exploring now, but because Japan has a strong tradition of fiscal discipline, I'm wondering to what extent does this move expose perhaps a widening split over the country's economic direction within the LDP?
So, Jill, when we think about why Japan has debt, really it goes back to an economy that was built on the bubble, right? This fast-growing economy in the 70s and 80s, property bubble. So they created social welfare systems and a budget that was representative of the kind of economy they had back then. But since the bubble burst in the late 80s, we've seen stagnation, economic stagnation, deflation, and they're still trying to get their way around the challenges of an old economy that was supposed to fund all these different systems that doesn't exist anymore. So this is the real tension within the LDP. How do they continue to fund programs, help people, provide relief that the everyday consumer needs with a tax system and a social welfare system that was built for a very different kind of level of economic growth? And this is the tension within the party. And as I mentioned, it's not just Japan, Korea, United States, Canada, European countries, they're all facing the challenges of how to fund social welfare programs that were meant for a much more dynamic economic situation.
It's fascinating. Aside from within our own party, we can't forget the opposition, convincing the opposition that since there was even no real resolution on the issue in the last parliamentary session, how difficult is that going to be?
So the opposition parties within Japan today are very, very weak. Their most distinguishing feature actually is related to the constitution and not changing the constitution and not increasing defense spending rather than increasing social welfare spending and dealing with these kinds of challenges. So there's more alignment on debt relief and helping with ordinary citizens and affordability than I think we appreciate in I guess, outside of Japan. Where the big separation really between the opposition parties and the leading majority party, the LDP, is very much about security and defense and how to manage the challenges within the region. And I think because of this alignment, we're going to see support for these programs. The question is how much pressure do they put on the LDP to get more relief for the ordinary Japanese consumer?
Professor Nagi, what does this tax cut look like on the ground for businesses and households? Would it make a meaningful difference?
Sure, 8% to 1% in terms of consumer tax would really decrease, somebody's, grocery bill by, let's say, if we were put in American dollars, by $8 if you're spending $100 US. So that's a big bite. That helps, I think, for the ordinary citizens, and it'll give them more spending power to try and deal with the challenges of inflation. We have all these outside forces. Of course, there's the war with Iran and the closure of the straits causing energy prices to increase. The same challenges coming out of the Ukraine-Russian crisis, with Ukraine hitting the energy security deposits of the Russians. This all has downstream cascade effects on the ordinary consumer in Singapore, in Japan, and Canada, where I'm from. And the governments are trying to manage this. And I think any kind of relief at this stage to deal with the affordability challenges of a stagnant economy, or an economy that really has had stagnant wages for 30 years, is going to be very helpful for the ordinary citizen.
So I'm going to ask you to project perhaps 2 years down the road, and this temporary tax cut is proving quite popular. Is there a realistic chance that Japan would ever put that tax back up?
So when we look forward in terms of where the economy is going, parts of the Japanese economy are booming, doing very, very well. Property prices are going up in central Tokyo, where in the countryside it's not affecting, the properties are flat. So in 2 years, what we're likely to see is that consumers are going to become accustomed to low prices. They're going to resist a return to high sales tax, and the government's going to have to find new streams of income to replace that stream of income tax. How are they going to do that? I assume they're going to tax foreigners, foreign businesses. We're likely to see new engines of growth come online, whether it's the semiconductor industry that's being produced up in Hokkaido or Kumamoto with TSMC and Rapidus, or we're going to see more taxes come from defense cooperation that's occurring between the United States, Japan, and other countries. So they will try to find ways to make up for the income. But once these kind of cuts happen, it's very unlikely that they can move back to 8% anytime soon.
You know, we always appreciate you coming on the show. Thank you so much, Professor Stephen Nagy, joining us from Tokyo. Now, have you ever had one of those sweltering days when all you want to do is climb into a fridge? Well, Japan may have taken that idea quite literally with an actual human-sized refrigerator. The specs are on CNA's TikTok. It's like a one-person cooling booth inspired by Japan's iconic vending machines. You step inside and it's kept at a cool 15 degrees Celsius. Now, the makers say just 10 minutes can help relieve heat exhaustion, which is pretty timely with the heat stroke alerts all across Japan. Temperatures are expected to hit up to 40 degrees Celsius. Now, the price tag, that's what we all want to know. What does this human fridge cost? Well, almost $10,000 including tax. And that can buy you 4 units of powerful air conditioners, enough to cool a gymnasium or even an events hall. The human fridge is meant for flash cooling people who are working in extreme heat. And we're talking about people like construction sites or people working in factories. Now, a Zen ritual rooted deep in Japanese culture has taken different forms all across the Pacific, taken with strawberry jam or maybe with a scoop of banana pudding. But matcha's surging popularity is putting a strain on its supply.
Here in New York, matcha is rapidly becoming an American staple.
I'm trying to find the best matcha spot in New York, so I'm finding the lines because usually the lines are like where the good stuff is.
Honestly, this is definitely the best matcha I've had in New York. I've had a lot of matchas.
From Japan's tea fields and a centuries-old tea ceremony school to trendy cafes in New York, the matcha renaissance, causing shortages and record-high prices in Japan.
The tea master here says the current craze for matcha is impacting the traditional Japanese tea ceremony.
昨年が我々茶道史上初めて抹茶が手に入らない年になった。
Sohen's daughter, Soi Yamada, is embracing matcha's global popularity and adapting to new trends.
This is the original matcha used for tea ceremony, and this one is designed for matcha lattes.
She is currently collaborating with a tea company to create a special matcha powder for matcha lattes.
Japanese people have been enjoying matcha through the tea ceremony since the 15th century. And the tradition continues today. And through the centuries, many styles of tea ceremony have developed.
Tencha is the raw material of uchi matcha. According to a green tea distribution center, the first auction of tencha saw prices hit a record of nearing $40 per pound, a sharp increase from the previous year.
They started the tea farming here more than 300 years ago. But due to the foreign demand, they are facing the shortage of the matcha tea.
Motoya Koyama from a Kyoto tea company says inquiries from overseas increased after the pandemic.
安定して皆さんにお届けできるっていうのはある程度の量が必要なんですけども、そこの確保が大変で。
the company must purchase from tea farmers and wholesalers to meet demand. For Sohen Yamada, matcha is more than just a drink. It's an experience that elevates the body and spirit.
抹茶のなんかこう香りを楽しみ、味を楽しみ、一緒にいる人とのなんか一体感を楽しみながら飲んでいくっていう。でそして精神性を磨いていくっていう、一つはそういう文化もあるので、きちんとなんかそちらについても理解をしてもらって。
Still to come on East Asia tonight, South Korea's ex-national football coach in the hot seat as lawmakers question his hiring, suggesting that he was offered the role at a bakery. The Grammy chief defends the new Best Asian Pop category after K-pop superstars BTS opted to sit out next year's show. Welcome back. The former coach of South Korea's national football team says he takes full responsibility for the team's early exit from the World Cup. Hong Myung-bo appeared before lawmakers as part of parliamentary investigation into the Korea Football Association. Now, he resigned after South Korea failed to advance from the group stage, following a shock 1-0 defeat to South Africa. The investigation goes beyond the team's poor performance at the World Cup into alleged mismanagement of the publicity-funded Football Association. Lawmakers argue that Hong was offered the role of coach at a late-night meeting in a bakery without a proper interview. But he said he believed the proper recruitment procedures had been followed and denied asking for any special favors. He also rejected reports that he was paid about $2.6 million, but declined to disclose his actual salary. A football writer, Stephen Han, says the issue would not have escalated if South Korea made it to the knockout stages, but the early exit drew renewed attention on the KFA.
The result at the World Cup is what put this problem in front of everybody in Korea, if I can put it that way. So it was poor performance on the pitch for one, but Korea exiting the World Cup early is not exactly why there's now a parliamentary hearing about this whole scandal. You know, there are two major issues that led to this mess. And number one is the governance surrounding Korean football is allegedly corrupt, not incompetent, but allegedly corrupt. We all know that you cannot punish people for not being good at their jobs despite being hired, but you can if they're corrupt. So at least in theory, that's what this parliament hearing is supposed to figure out, whether these decision makers in Korean football are just bad at their jobs or if they're bad people altogether. That's number one. And number two, partly because of these problems off the pitch, the general consensus in Korea now is that these issues have contributed to the poor quality of football that we're seeing on the pitch by the Korean national team, which is by far the most popular sports team in the country by some distance. And the belief amongst the majority of the fan base is that when making major decisions within Korean football, like who coaches the national team, who hires the coach for the national team, the belief is that the corruption off the pitch has led to the KFA making decisions for the benefit of certain individuals rather than for the good of Korean football. So whether we can really expect that this parliamentary hearing can make, substantial changes that the Korean people want to see, I'm really not sure, to be honest. We're just going to have to wait and see. So, it's going to take some time. I believe the presidential election for the KFA cannot be held until next year. Mm-hmm. So this is something that's going to take some time, but we'll see how today goes.
The FIFA president, Gianni Infantino, has downplayed concerns over plans to sell stakes in the competitions, including the Men's World Cup. The football governing body announced this week it is looking to create a subsidiary to oversee the quadrennial tournament and other events.
Well, FIFA for Enterprise, or FFE, is actually a proposal, an offer. It's part of a democratic process, a consultation process. And above all, it is an opportunity, but not an obligation. And as I said, it kicks off the consultation process.
Under the plan, the new US $20 billion subsidiary will offer stakes of up to 20% to external investors. That's according to The Times. Mr. Infantino told FIFA members they would receive $40 million each if they agree to the proposal by mid-September. Now, this will be implemented if approved by more than half of the 211 member associations. The move has sparked global outrage. The Asian Football Confederation and the Confederation of African Football have called for more transparency and an executive review of the plan. UEFA, a European Union, accused FIFA of putting the World Cup's soul up for sale. The French government has confirmed it is holding emergency talks with European football bodies to discuss the privatization plan. So while FIFA is world football's governing body, it can't simply push through major decisions such as the new commercial venture. And that's because of how the sport is organized and where the money is. Julie Yu explains.
The FIFA's plan has highlighted the balance of power within world football, where it sits at the top of the governing structure. It oversees the World Cup, sets the international match calendar, and establishes global rules for international football. But FIFA doesn't run the game alone. Now, every national football association also belongs to one of FIFA's 6 continental confederations: UEFA and Europe, CONMEBOL and South America, CONCACAF and North and Central America and the Caribbean, and AFC in Asia, CAF in Africa, and OFC in Oceania. They are not FIFA's regional offices. They're independent governing bodies with their own congresses, competitions, and commercial programs. And one stands out: UEFA. Now, the UEFA organizes many of football's biggest money-making competitions, including the Champions League and the European Championship. Europe is also home to many of the world's biggest clubs, leagues, broadcasters, and sponsors. That means UEFA controls many of the game's most valuable competitions, giving it significant influence across world football. That's why the views of powerful confederations like UEFA carry so much weight when FIFA proposes major changes.
Well, before we go, fans of K-pop sensation BTS are rallying behind the band after the group announced it will not submit its music for consideration at next year's Grammy Awards. Now, this comes a month after the Grammys announced 5 new categories, including Best Asian Pop. All 7 members of BTS shared the same note on Instagram, saying they hope their music can be heard and loved for what it is, rather than being divided by region or language. Critics of the new Grammy category say it's put Asian artists into a separate box instead of recognizing them alongside global peers. But the Recording Academy says the award is meant to expand recognition to music across K-pop, J-pop, C-pop, and even beyond. There are also existing categories like Best Latin Pop and Best African Music. CEO Harvey Mason Jr. emphasized that submitting music to any category, including Asian pop, does not prevent an artist from being considered for the general categories, including the coveted Record of the Year, Album of the Year, as well as Song of the Year. Now, BTS's comeback album, Arirang, is a global success, topping the Billboard 200 charts for 2 weeks, a new record for a K-pop act. Despite multiple Grammy nominations over the years, BTS has never won the award. They join artists including The Weeknd, Drake and Morgan Wallen in choosing not to submit their music for Grammy consideration. Well, that takes us to the end of Thursday's edition of East Asia Tonight. Don't forget your headlines anytime. CNA.Asia. Check us out on Facebook and YouTube as well. Have a good evening.